Good morning. All right, so pretty quiet here. End of the quarter. And get some charts. I'm doing well. Thank you for asking. And you too. All right. So yesterday we had a little bitty correction day. But is that a correction? Well, not a correction in the context of what we had over the last couple of weeks, but we could come back to this in a week or so and say, hey, that was the beginning of a correction. It's too early to tell. And our bias yesterday, what we talked about was, well, if the markets, and we were looking at the futures then, if the markets continue to stay lower and go lower, well, how deep do they travel into the prior bars range? And then how far do they close into the prior bars range? And part of the bias yesterday, well, if they break the prior day's low, SPY, S&Ps, well, they should fill the gap from the gap up. Well, they got close, but they missed it, maybe because the market closed, actually. But as prices were moving down yesterday, a couple of things happened. Well, right at the low, there was a big downtick, NYSE downtick under minus 1,000. And that typically ends the move. And in addition, there was, range expansion bars down there. Now, one of the concepts with candlesticks is a wide range bar, an igniting bar, which comes out of a consolidation, or does it come after a multiple bar down move? And yet, it's only a 5-minute chart, but the concept applies to all time frames. And so, not only did we have a large NYSE down tick under minus 1,000, which historically intraday will set at least a short-term low, but it happened after multiple down bars. Whereas if we would have got that same down tick reading on this bar, it would have been confirmation. And so we got it down here and we got a little bit of a bounce. McGraw, his natural gamma pin as opposed. So McGraw, that immediately creates my thought leads to, well, what's an unnatural one? If there's a natural one, there must be an opposite of that. But the pin was at 4,600, which it went through it. Right? So that was up here. And as it relates to that, 460. But if we look at SPX, we come down here, and actually it was like yesterday. Yesterday was like early in the morning, kind of tested that, and you had the retest, and then boom. But it didn't get down to fill the gap. Again, high down tick reading, wide range bar, end of the day, shorts want to cover. So we look at all these technical things, and there's also the psychological part, which would have been interesting as far as the bearishness or the lack thereof, meaning it had gotten down there. There was this big downtick reading. There was this wide range bar, coming down to this level here. And then the little bounce that occurred there, it would have dropped again. And so rather than traders being hesitant to continue to be short, continue to short right into the close, it had a pretty nice bounce. And there was the fear of, hey, and they drove it right back up again. So it's kind of like the psychology of what we see on the charts. And that had formed like this little minor bottoming tail bar. So what do we have going on here? Well, we've got a little correction, beginning here. Since it got up here, we thought, well, maybe this can keep going. And maybe it does. This is still in an uptrend, and this is, up. Well, we really call it sideways since it's rallied this far. And the weekly is still, it hasn't retraced 80%. So that's still considered a downtrend, according to how I look at it. And we'll see whether it starts to roll over here or not. So when we get a big move, and this applies to, let's say this was a 5-minute chart, but overall, let's say the 60-minute chart is still pointing down. Well, you don't want to go ahead and short a move like this or this one. So what do? We wait for a retest pattern. So while this in 2020 hindsight, we might come back to this in a week or two and see that this was the high day, which obviously we don't know now. Maybe it comes down and it retests and forms a larger area of overhead resistance. We'll just have to see if that actually happens. And that's the idea behind M tops or head and shoulder tops and so on, is that prices are moving up. They move above some resistance. They retest where it initially failed, and that sideways correction doesn't result in the resumption of the uptrend. It then starts to move down. Right, it got over these two pivots, Tony, sure. But, you've got a weekly chart here, which got over, the area here on the weekly chart, and a lot of damage was done. And so it's too early to say whether this is enough to repair all the damage. We've had this move off of the low. It was impressive. So this is the end of the quarter. There'll be this what's called window dressing, where funds will look to the stocks that were winners that they want to put in their portfolio and look to buy them. Kind of like fake news. It's like, okay, now they're going to buy them to show that they owned them. In any event. So now we got to see, what happens here, what kind of pattern develops from this damage that was done. And, it's been a long time since any damage like this has been done. So kind of like a new world, so to speak, in the short term. This was the Corona, flash crash. And there was kind of like a little, but this one here, you can see, I know it's got it scrunched up, but a little bit more of a longer correction. And then this rallied all the way back up to the highs. Can this happen here? Well, I mean, we look at patterns and say, well, that pattern did that. This pattern could do that. Well, it could, but will it? Back then we didn't have this going on. And when you go back and look at those point in times, these yield curves, like this is inverted deeply. This is right there. And, this is starting to, if we go to the daily chart, it's starting to come in. So, environments change. And that's why we look at market internals. We look at patterns and say, oh, this pattern should result in this similar looking pattern doing the same thing. Well, maybe not, but market internals, yield, sentiment, yield, breadth, and so on are another part of that three-legged stool that we talk about as to, is this point in time the same as the past? Maybe it is, and maybe it isn't, but now we can see it isn't. But in the end, we still are led to, well, what's going to happen now? And that is what's going to happen here. Consolidation after the run up. Does it continue to go up? Does it so on? So we had a correction day within a strong move. And I think that today it probably somewhere in here. I don't think it'll come anywhere close to down here today. But somewhere in here, is probably where it hangs out, give or take, up and down. Right. So looking at other clues, what are other markets doing? And we had the same type of correction day. It didn't break a prior day's low. It got close to the bottom and buyers showed up. So it was an inside day, during the trading day, it was going down, kind of like you can see the correction day, that was going on. And it was a correction day, so downtrend on smaller time frames, higher time frames. It's just a resting day, no big deal. It held above the whole number. It held above the prior day's low, running in place. Another running in place day yesterday. Chop, chop, chop. Looking at the cash, came down to the low, didn't fill the gap, held above the 200. Same story. Going to take out yesterday's high, yesterday's low. This is still in the downtrend. It's at a point where theoretically, just because it's in a downtrend, it should roll back over. But got a monster wide range bar off of the low. No, it's not a no-brainer kind of situation here as to, all right, this is where it's likely to roll over. Now, that being said, we got lots of concepts that, because we're pattern traders at Master Trader, one of the concepts is wide range bars create voids in smaller time frames. And here's an example of that. Now, wide range bar is a sign of strength. We look for prices to stay in the upper 50%. But now that this has come up a bit, it's the weakest link. You see the way that this went up here. So whatever correction may occurred here, it better stay above this area. So this is something you can take into the coming weeks, and we'll be looking at this to say, all right, whatever's correcting here, whatever big red bars we get, it could just be a correction day. But as long as it stays above here, it's just noise within the prior bullish move. And we'll just see how this develops over here. But if it breaks below here, especially on a closing basis, that's going to open up the door to come all the way back down. So this is going to be a key line in the sand as far as this index goes. And we will continue to monitor this in the coming weeks. And just we'll do the similar thing with other markets, and they don't always line up in the same ways. So why we look at them and say, hey, are these things moving together? Is one showing relative strength? Is one showing relative weakness? And that's what we call the factory work. Right? And same story, right? Kind of leads us to this being a big line in the sand for the broader markets. No 2 pivots week. No, not this week. That's going to take some time. Look, we don't know what's going to happen. Ultimately, we're not the, I guess, the creme of the creme of the gurus there on YouTube or whatever that predicts the future. This is what's going to happen. We just look at what happened in the past. We look at what happened now. We know historical patterns, and we know if prices break below this level, it's going down, right? Because it's not supposed to based on the strength of this move. So we'll just have to see if prices correct within this area and what develops. And news, there's always news driving the markets, and interest rate hikes are coming, and maybe the next one is 50 basis points. And so we'll just see how it all develops. Transports had a correction day after a breakout. That's a little bit more, bearish, and we'll see what develops there. And since it's got all of this higher level of area here, that it held up better than the rest, well, it better not come too deep into here. Now, when we look at, where is our WM? Breakout, wide range bar, closing above all these pivots. It's like, that's got to go up there. And now it closed under yesterday's low. That's not a good sign. All right, so can it hold here? Does it go sideways? Do we get a bear sandwich? I mean, you might say, what the hell's a bear sandwich? Well, we'd have to go ask Dan, but I know what the picture is. Would be, well, what if today does that? Then we get a bear sandwich. And it's like, oh, yesterday was just a fluke. Well, now we got this big correction, 3-bar consolidation. We spoke about that earlier in the week, one about this. And if we did get that, then we're back to, hey, that's going up. So we're going into today looking, what's the next bar going to form at the end of the quarter here? That's going to guide us into next week. I mean, that's kind of the essence of what we're looking for today. Interest rates, uptrend, going up. I showed you the yield curves there, and we'll see if the 5 winds up coming down under the 30, which is going to be another bearish sign, but markets don't care for the moment. Oil correcting a bit more here, which is not unusual after that kind of a retracement. And silver shopping around, got a bottoming tail bar. Maybe repairing the damage here. Maybe it's just a wild, whippy consolidation. We shall see. But at least the picture is one that we would just call stay away from it for now. That looks a bit cleaner. Not great, but a bit cleaner, better. Here's an example of a wide range bar and, a little bit of a void above. Maybe this can keep going. And if it gets up to the top of that wide range bar, that's going to be a pretty positive sign for gold, that it was able to negate that bar. And this broke the low. So again, we're looking for the next bar. As for today, I looked at that. Doesn't look so bad. VIX mentioned yesterday, it's way down here and started to roll up here today. So I don't know, I'm kind of thinking today might not be such an eventful day, other than maybe toward the end of the day, we shall see. And we'll see what these bars look like at the end of the day that'll guide us into the new quarter. There you have it. All yours, Dan. Yeah, XBI. Thank you, Dan. Dan's been an XBI. So, XBI broke out, and you say, why did IWM happen? Well, XBI is a big part of IWM, and so is KRE. And look at that. So it's a mess. Overall, yesterday was correction day, but in certain places it was more of a correction day than in others. Take it away.
Good morning. Yeah, a bunch of things. We had a nice long watch list in the morning, and then went back into the close, and yeah, it got destroyed. ARKG looked fantastic in the morning. Deep retracement, TAN, a bunch of others you mentioned. All right, so all our opens are fine. I don't have anything to mention. We have a Tesla call spread for Friday. That looks great. In fact, I got to go see how much open gain we have at the open. We have a coin put spread for tomorrow is Friday. And finally, LSIT put spread for tomorrow. That's fine, even though it came in, it's the 25s. And then we have for next week, we have Netflix and PayPal. PayPal came in, put spread should be totally fine. Still a nice weekly. Let's I don't have many earnings, but let's see what's over here on the interest list. IZEA gapping up. That's a big gap, 144 to 180. So it's too big for me. Tilray, nothing going on, but I'm watching the sector as I have been for a long time. Kind of a double bottom, new low plus, biggest weekly green bar in a long time. And in that sector, Janet mentioned Curliff yesterday. Actually had a beautiful close. Target maybe 8. It should be 10%. Hewlett. Hewlett Packard. It's not earnings, so I don't know what's got this thing in a tizzy here, under 37 bucks, but it's in the middle of no man's land. So I have no idea. I don't have a bias. Got to see how it's going to react in the first 30 minutes, but I will put it in a thumbnail. CVS, I read in the journal, they settled the opioid class actions for almost $500 million. Wow. No pattern here, but we'll see what happens. GME has been on my call watch list for the last 3 days. Wide range igniting, turn day, lower here, had a beautiful breakout failure on the 15-minute chart. This would have been a great day trade short right there. Breakdown, sell set up at resistance, 180 reversal. That's your no-brainer entry. But the problem with this thing on call spreads is all of the strikes are expensive. So when you try to get a midpoint of a spread, it's not as juicy as you thought. Lulu was on my call spread list yesterday, and just kept going. So I stayed away from it. But it's still on my list. We aren't going to get the same premiums, obviously, as yesterday. VIPS 980. There you go. 30-minute high. I like that. Put that in the window. And I think the news on VIPS was just a $1 billion stock buyback. VNet, I forget if it was earnings or something else. I don't see any prints though. Flex gapping deep into a red bar. 30-minute high. We'll come back to you. DDOG, no pattern other than possibly a put spread. Well, let's leave that on there, because if DDOG, I forget if it was earnings or other news, but if it were earnings, then, well, I'll tell you right now, if it had earnings, because of the expected move by Friday is $7. So yeah, I think that has to be earnings. So yeah, let's keep an eye on this for a put spread. The old DDOG. PHR. I see one print down here, but not enough. Massey 140, bearish gap down. The major support. We'll see what it does. FC, there's no volume, but I agree with Greg's concluding assessment of today. I think we're just going to chop around, and it's going to be a boring day. And then, and because of the window dressing. Now, Greg, when you were talking about window dressing, I know it used to be a big factor in the past. But are investors really that stupid these days that they just say, oh yeah, look at all these good positions my fund manager has? Or do they go right to the bottom line, which is tell me your quarterly gain versus the S&P? Really, George? I mean, I honestly don't. I mean, we looked at ARCG yesterday just for the fun of it to see what was under the hood. But for me, if I know I'm in a biotech ETF, I don't care what the manager does. Just show me the remember Tom Cruise? Show me the money. Show me what you did for me in the last quarter, in the last year. That's all I care about.
And if people were that smart, you wouldn't have 1 million views on the guy on YouTube showing him sitting next to a stack of $100 bills saying, buy my indicator to make all this money. There wouldn't be people like Madoff in jail and so on. So yes, a lot of people are ignorant. I don't say ignorant. They just don't know. Greed brings in people. Why do people come to the markets just like I'm not innocent? Come there and willing to throw money at it without any knowledge of anything. So that's the story.
Yep, I agree. Human nature. All right, this is what I emphasize the word potential bottoming pattern. But then you need a something something bar, and it was up, and now it's down. So I don't know. So what I do here pre-market is I'm looking for tier ones, which tier ones to me are the multiple time frames. Everything's good to go. They're acting well pre-market. 5-minute high, it's good to go, provided it doesn't crap out. And all these, every single one of these that I just went through, they're tier 2 because I still got to watch them. And then I'll come back at 10 o'clock. And because you hear me saying, well, let's come back at 10 o'clock and see what it did. And then I'll either leave it on the list and set an alarm, or I'll delete it. You're out of my minder. All right, so that's what I do here in the morning. And I haven't found a single tier 1 yet, not a single one. A path getting whacked here. Wow, that's a big whackage. Look at that downtrend. Wow. So Greg, we tell people over and over and over again, you trade our strategies on any time frame. So this is a weekly chart. We had a breakout failure, 100% retracement, topping tail, green bar ignored, breakout failure, wide range. That's your short. Green bar ignored, sell setup. I mean, look at the 20 MA, is it a 45-degree downtrend? That stock's in pain. WBA, Walgreens had earnings. It's a bearish gap. I got a bearish bias on this because I got so many more overhead football players than I do football players here on support. So it's down a lot pre-market, but depending on how much it bounces in the first 30 minutes, as of right now, I got a bearish bias on it. Hey, Sean, 9.25. So this is a gap, a pro gap breakout from a multi-month consolidation. It's gap's pretty darn big, but I'm putting that in a window. LGBN. Oh, the paper said the CDC is lifting its cruise ship warning. And this was the best looking cruise ship of the 4 that I was watching. I said on this day right here, 328, we were going to buy it the next day over the high, and the gap messed me up. And so Northern and RCL have been stronger. Kook, Kook is wow, look at Kook gapping down on the good news. It was up a little bit, and look, it's down again. So Kook is the foreign brand of CCL. Oil down. Greg's buddy Joe Biden is trying to get some brownie points with releasing oil from the reserves as opposed to opening up oil domestically. That's what a sore subject that is. Here's a potential bottoming pattern. Wow, this thing went to 110, coming out of a coma. So obviously that's a SPAC. I'm going to put that in the window just to watch it. ISPO. I know, Joe, and I remember that movie, Bad Boys, where with the police chief, he had to go to he had to go to his class and say USA. So I got USA myself when